Hello, everybody. Welcome to CoinFund Q&A. Today we have the AirSwap team, Michael, Don, and Deepa. Welcome, guys. Thank you for joining.
Thank you very much.
AirSwap is in the space of decentralized exchanges with some peer-to-peer architecture. Do you guys want to introduce yourselves and give us a little bit of a background about what AirSwap is?
Sure. Left to right, right to left. Sure. So my name is Michael Oved. My friends call me Oved, so I just thought everyone would call me Oved. I studied math at college and then went into Algo Trading Company, which we grew significantly over 7 years. And we were able to IPO in 2015 for $2.5 billion. Kind of took some time off and then caught the Ethereum bug at Further Future Music Festival, where I met Joseph Lubin and Consensus, and I had no idea who Joseph or Ethereum was at that time. That was in early 2016. Now you know all that. No, no, yeah.
What about you? What about you, Don?
So I'm Don Mositis. So Oved and I actually went to school together some years ago. But my background is in like early stage technology, so kind of classical training in Silicon Valley to some degree. I'm an engineer and designer by trade, but I've always really had a passion for early stage and product development, product design, that sort of thing. So that's my angle.
Cool. So I'm Deepa. I'm an engineer on the AirSwap team. I guess how I heard about AirSwap is I met Michael and then I met Don, and I've been working with them for I guess over 6 months now. And my background is just has been building different like financial applications, building trading systems, and just like understanding financial markets in general. So this is just a very cool space to be in terms of being part of like the decentralized community, and then also just being part of the actual trading side is kind of where I fall under for AirSwap.
Cool. So tell us a little bit about what is AirSwap and kind of what brought you to this particular area of blockchain technology.
Yeah, so probably around September of 2016, started to think about, or maybe made the decision that I wanted to do Ethereum full time, and started to connect with the Consensus people in New York. I was living in LA at the time, and we spending a lot of time with Consensus. You know, the one thing you realize is that everyone wants decentralized exchange. I mean, it's kind of like blockchain is at the point where you have this technology where you can build this global exchange. You don't really need a central location, which limits you in a number of ways. So it was really, you know, maybe around January of 2017 where Don and I started talking and started to formulate the ideas for the swap protocol. It is what we released at first. And we're basically really thinking about the problem in terms of what is the blockchain good at? What is the blockchain limited by? I mean, it's a new paradigm because you have the nodes are distributed. You don't have a central location anymore to handle like matching, for example. And you also don't have, it's not logically centralized anymore because the messages might be passed between the nodes asynchronously. And so we're just kind of thinking about the problem, you know, abstractly using understanding of financial trading, financial markets, and Don, you know, obviously bringing his tech experience, product experience, shaping everything into something that you know is usable and readable and clean. And you know, with Deepa, we were able to build our first prototype in March or April of 2017, and you know, shortly after released the white paper. White paper release went extremely well in May. We got like incredible feedback on that, and then in June we became a Consensus project. So it's really cool.
Nice, congrats, guys. So the sort of the need for exchange is it's kind of obvious, right? So you have first of all, cryptocurrencies and fiat, and that's kind of a vital link that enables currencies like Bitcoin to have value, right? Because it exchanges with real sort of government issued money. And there's certainly a case for, you know, for the need to exchange various kinds of tokens and blockchain assets amongst themselves. But I guess my question is, so what drives like the architectural decisions between starting a centralized exchange and a decentralized exchange?
I think there's a few factors there. The first is, I think we might have mentioned the idea of an order book earlier. So the idea is that you have this kind of design for order matching. It works very well in a centralized context, and it's highly automatable. And it's like this kind of very powerful technology that's come into its own in Wall Street over the course of the last 25 years, right? Where taking that design and trying to put it into a decentralized context to the point where it's no longer sort of logically or physically centralized, you can't take advantage of the same design strengths of the order book.
Well, so I guess that's kind of my question, right? So when you go into the decentralized context, a lot of the market microstructure design that's traditional becomes a lot harder to implement. For example, order books, right? In Ethereum, where you have the need to kind of create a transaction every time you want to cause an action, it's very hard to have a completely decentralized matching engine. So my question is around, why would a particular architecture go into sort of a decentralization mode where it's actually, it starts to incur latency, it starts to incur kind of all these challenges around recreating that microstructure.
Right. So like some of the things that you get with the decentralization, as you mentioned, right, this is going to be inherently slower if you're doing everything over a blockchain, right? Because new transactions only get put in every 12 to 17 seconds. Whereas if you look at something in traditional finance, you're working on the order of microseconds. So there's like one distinction with speed. Other things are there's changes with liquidity. So the amount of volume that's being traded for what's happening in the cryptocurrencies versus what's happening in like traditional assets, there's a very different volume, and which impacts how quickly you're able to buy and sell in the cryptocurrency space. So that's another reason for moving from using decentralized, which almost relies on a higher liquidity to get to that perfect or more efficient market price, and to doing decentralized where you're doing more peer-to-peer exchanges. And then there's, I guess you bring up the point where there's something that if you have everything in a central location and miners are the ones who are putting the information onto the blockchain, there's something known as like front running where people are privy to information prior to others, which does not exist in centralized locations, is something like we've had to deal with our own design, and for that reason, that's why we don't have like that centralized order book on a blockchain. So I guess those are some of the reasons I think we chose the design we did for AirSwap.
Yeah, and I think your point that in order to move to a decentralized design, you can't be like giving up a lot of the advantages of the centralized trading systems. And centralized trading systems are they've come to a point in society where they're pretty good. So if you're designing a decentralized exchange and you're introducing all these limitations, just on the user experience level, and even on the fees, you're not gonna be able to compete with decentralized exchanges. So we kind of took, I would say the differentiation in our design is that we took an approach that we thought would be very advantageous for market makers. So our thesis is that in order to have good liquidity on your platform, you need to have market makers, right? And one of the things you described, which is like storing transaction on chain, storing an order book on chain. If you're processing orders and cancels on chain, you're gonna make it very expensive for market makers to quote, because market makers basically will place 50 orders and execute one of them. So you have an order to cancellation ratio of like 50 to 1. Sorry, order to execution ratio of 50 to 1. So if you're not willing to play with something like that and you're not willing to allow the algorithms onto your system, you're probably not going to have much liquidity. And so our design is strictly peer-to-peer, and we believe that, and with our design, we don't think that market makers are going to be limited.
By being strictly peer-to-peer, it means that the interactions and negotiation, the pricing is done.
It's almost like you're doing more requesting for quotes as opposed to doing like a proper central location where all the price information is present.
Right. So cool. So we've covered like some of the issues around building decentralized exchanges, right? So we said there's automated order matching is kind of an issue. You guys point to scalability, in other words, and this is very interesting. We should get in deeper here. But if you're keeping everything on chain, you actually have a scalability problem with the exchange, and so you might want to go to an off-chain architecture. What about front running? There's been some interesting articles in the past about how if you are doing placing orders on chain, then it's in certain circumstances it might be possible that miners can kind of acquiesce your transaction and front run you. Is that something that's solved by the off-chain architecture you guys are about to describe, or is that still kind of an ongoing issue?
It's kind of a non-issue.
Yeah, so that is so with centralized designs, you have to essentially trust the central party to not be front running your orders.
Mm-hmm.
Like they are actually privy to order information before everyone else, but there's probably regulation in place or processes in place where they're
Enforced trust.
Yeah, it's like an enforced trust. Yeah, but then when you move to decentralized trading environment, you're right. There's the potential for front running. So what is front running in a miner context? It's basically there's a public order book. The orders are not assigned to any taker. So any taker can essentially execute any of those orders. So if someone wants to take a big order from that order book and they try to submit it to the Ethereum network, you could have the miners basically sniff the transaction and submit their own transaction in front of it. So that's a common, I think at this point, a common problem. Maybe 6 months ago, people didn't realize this, but I think now people realize that it's an issue with blockchain-based order books. And so in our design, actually, we don't have an order book at all. Sorry about that. And the orders are actually passed peer-to-peer, and it's private, and they are signed for the specific counterparties they are for. And so therefore, there's no first of all, there's no order book to front run. And second of all, there's no opportunity for the miners to submit their own transaction in place.
There's no way to act on it.
I have to answer the door.
Okay. Sure. Okay, very good. So can you guys tell us a little bit more about the architecture of this particular system, and how does the sort of on-chain layer work, and how does the off-chain layer work as well?
So the line that we draw between off-chain and on-chain is that the on-chain is really just for the settlement. So everything else is happening off-chain. It includes counterparty discovery and what we call negotiation, which really just means requesting and getting order. And so what that means is that you have kind of two primary activities. One is the discovery of counterparties. So we have what we call an indexer, which is a destination for people to announce that they're willing to trade certain tokens. Mm-hmm. And then other people can come in and say, I'm willing to trade these tokens, and they can discover each other that way. And then subsequently connect to talk pricing and make trades peer-to-peer. And then subsequently, when you're once you've discovered somebody and you want to figure out the pricing, you may, for example, not have experience trading a certain token pair, so you might want some like pricing suggestion. So we introduced this notion of the oracle, which can introduce pricing data into the negotiation process. So in our case, as opposed to having an order book, we have what we call an indexer, which is essentially a discovery service, which includes no pricing information. Pricing of the trade is figured out on a strictly peer-to-peer basis.
And then once they've negotiated the price, they're going to take that almost like a signed transaction, and so the one taker will actually submit that to our exchange contract, and that's where the actual swap will occur on the Ethereum blockchain. Yeah.
So and just to kind of like put some visuals onto this. So basically, the way it's going to work is you have a taker come in, and they're going to be able to search through all the counterparties and discover who are the counterparties that I want to request a connection with. They'll make connections to, let's say, 10 or so market makers. They'll broadcast out to these market makers a request. The market makers will return the request to them, and then essentially what you're going to have is you're going to have 10 or so or however many orders. What you have are 10 orders that are for you. They're not public for anyone else in the market. These are orders that have been crafted for you, and essentially what we're calling this is a personalized order book, which is kind of an option. But we think this is a really powerful concept. It's a local order book for you only.
Which works well for personalized pricing and also like variable sized orders.
So what are the advantages of having a personal order book? It seems like, if I can see sort of more orders coming from the market rather than this kind of, I guess, we call dark pool format, it would appear I maybe have more information about how people are trading. So why do you see that sort of a restricted view of the orders are an advantage there?
Yeah, so the comparison to make is in traditional financial markets, you have midpoint pricing. Mm-hmm. So in the case of retail investors trading, a lot of times they're able to trade at the midpoint, and that's a really big advantage because you get half of a tick or whatever it is. And the reason why that's possible is because market makers are able to quote privately at the midpoint without getting picked off on a public order book. So again, we're coming back to why this design is powerful is because it's built for market makers. And we think that when you provide a service for that market makers will really like, they'll be able to ultimately quote very tight prices.
Got it. And so what does this sort of look like architecturally from the user standpoint? Is it do I install a node and I have kind of a local interface to the exchange, or is it more of a web-based interface?
So there would be a client that you would be using, whether web or mobile, that would basically be interfacing with the indexer and the oracle.
Mm-hmm, mm-hmm.
So
Understood.
That's what AirSwap is, essentially.
So you can see, you envision you'll have a client on your phone, you'll have a web client, and you might be able to spin up a local client eventually.
Yeah, basically. I mean, there's really no, it's not like a technical limitation to building interfaces for every user.
Cool. And so let's talk about, the kind of assets that you anticipate will be supported on AirSwap.
Standards compliant at this moment, ERC-20 Ethereum tokens.
Okay.
Yeah, and actually another nice feature is that these ERC-20 tokens are only 100 million market cap or less for the most part, except for the bigger ones. And so these are assets that trade 20 to 100 times a day sometimes. And so actually in Wall Street, in the real world, things like corporate bonds and things like FX, like the lower liquidity FX, and things like penny stocks actually trade on peer-to-peer trading networks. So we think the economics of this design is going to work.
Got it. And do you anticipate any kind of interoperability with other blockchains in the future? Because what we see is really a fragmentation of the market across different networks. I mean, it's always been the case. I think to some extent, last year and this year, there's also a bunch of networks coming online that have native assets and so on and so forth. And really, taking the blockchain investing perspective, right? People kind of diversify their systemic risks across different networks, and for that reason, it would be quite convenient for them to have an exchange that covers all of the gamut of different assets that are available. Of course, Ethereum currently has a bit of an edge in the sense that it has a large class of ERC-20 assets that are interoperable, and so it's easy to create exchanges for Ethereum. But do you see interoperability in the future, or how do you view that?
There's two aspects to that. One is the kind of the technical challenge of doing these cross-chain swaps. The technology will get there.
Cosmos, yeah.
Yeah, exactly. So there's that, and like we'll get there. The second, I think, is that at least our white paper was intentionally transport agnostic. The formats are loose. It's basically kind of a high-level protocol. So that actually decouples us from implementation in many ways, such that as things develop and maybe sort of new chains arise or these cross-chain protocols arise, we can take advantage of it.
Cool. And can you tell us a little bit more about that sort of abstract separation between the fact that you have a exchange protocol and then I guess you have AirSwap as an application built on it? Yeah, what does that protocol do, and does it involve a token? Also, is a good question there.
So the protocol itself. Okay, so the distinction first between the white paper, which is essentially like a design document, and then AirSwap, which is like our implementation. So we implement an indexer and an oracle, and we facilitate the peer protocol. We have an Ethereum smart contract that implements the smart contract specification in the white paper. So it's essentially, we released the white paper and got lots of great feedback on it, released another version, I think, basically validated that, and then went to implement it. But there's not a native token to the protocol itself, and the protocol and the exchange contract itself is free to use, so there aren't any transaction fees on that, and that's by design. But our token is integrated into the implementation itself. That is AirSwap.
Got it.
Talk about is the AirSwap token.
Got it. So the protocol is kind of an open specification. Any third party can come in, they can adopt that protocol and therefore be sort of interoperable with your exchange, whether they're another exchange or a client or something like that, right?
Yeah, and in fact, we had this Japanese company, GMO Group, which is one of the biggest Japanese telecom companies, come out with their own version of what they were calling Token Trader, and it was an implementation of the swap protocol. So that was really cool for us to see.
And so you're mentioning that so the token that you guys are bringing up is specifically specifically pertains to the AirSwap application. Can you talk a little bit about the crypto economics of that token? Something that we study quite a bit here at CoinFund. What does it do, and why would someone buy it, for example?
So I think the token interacts with the two kind of major components of the system. One is the indexer. The first, given that the primary kind of value that we're creating is an opportunity for makers to be able to post their intent and essentially advertise that they're interested in trading tokens. Everybody else theoretically being able to read the indexer or query it to find suitable counterparties. But the former, we figure that that's an actual kind of key value proposition. And so in order to do that, you hold the AirSwap token, and we have kind of a mechanism where you can lock it for a certain period of time and be able to post the indexer to basically advertise your intent.
So when I sorry, I didn't mean to interrupt, but just to get some clarity. So when I put in a let's say like a bid offer, right? Is that something that I have to pay the token to do, and does that go on chain?
So what you would be doing is posting your intent to trade, which means I have token A and I want to trade for token B. I would just stick that and post it to the index, such that somebody else can come in, see that I'm interested in trading these tokens, and then connect to me directly. But in order to advertise that fact, I need to lock a certain amount of AirSwap token, and that gives me the right to post to the index.
So that sounds like an on-chain operation. Is that correct?
The locking mechanism is on-chain. That's right.
Got it. Okay.
Actually built into this.
So would it be like, would it be challenging to, in that context, for example, create like a very, very large number of offers?
Well, you can actually lock a variable amount of token,
okay,
and therefore sort of give yourself the ability to post more and more content.
Yeah, so it is rate limited. So if you want it to be very active on the index, you buy and lock more tokens. One of the points about the crypto economics that you brought up that's interesting is when you're locking these tokens, they're actually technically out of circulation, and so we'll be able to monitor that, I think, very closely, you know, the supply and demand of that, I think, will be interesting.
Got it. So it sounds like crypto economically, if you will, you know, you're saying like if there's a lot of demand for exchange, right? And so a lot of people are putting in offers and they require this token in order to create the advertisement on the network, then it sounds like demand for the exchange creates demand for the token, and you know, and therefore, like there's a plausible thesis that it would appreciate with increased demand. Is that sort of the link?
It's I guess we're not thinking too much about appreciation directly, but I do think that there is a clear connection, as you described, between the success of the platform and the success of the token. A lot more clear than I think other projects are.
Yeah, for sure. And we see, you know, we definitely see a gamut of those kinds of correlations and relationships that range from, you know, not correlated to generally correlated, and sometimes certain products have, you know, very, very sort of specific correlations that you can mathematically describe. I'd say this falls like kind of in the middle. But so interestingly, again, your point about locking in those tokens and taking them out of the supply, how long do those tokens remain locked up?
We're currently looking at 7 days.
Got it. So even if I put it in, you know, I advertise an offer and that offer gets filled, I still have a kind of a locking period of 7 days?
Correct.
Got it. Okay. So interesting. And who do you see as what's sort of your market strategy? So obviously there is a bunch of people in, you know, in our space that are very, very interested in exchanging tokens and so forth. But how do you envision kind of the audience of this application growing, and who are the users, and what's the market opportunity here?
Yeah. Sorry. I was going to say, I think that you know, I guess the first thing we'll want to do is pull proper market makers in, which without market makers, you don't really, you have a chicken and egg problem with markets. You need to pull these market makers in. I think you know, at least my personal vision for this project is to be a very Asia-focused project. I think that there's tremendous community in Seoul, which we spent some time with. Really engaged community in Singapore, you know, and then there's all these other markets like Indonesia and Thailand, and which have, you know, hundreds of millions of people. They're just starting to look at this technology. So if you provide a really good user experience, a really good interface, and, you know, obviously convert it to their local language, I think I mean the market's tremendously large.
And I personally take like an application kind of view. And so what that means to me is that these tokens that represent utility within a variety of applications are going to need to be interchangeable. And so as you're sort of around the web interacting with dApps or other kind of token applications, being able to swap into and out of different tokens quickly and easily in context. And I think that actually plays into a wider distribution strategy that we have as well for the index. So it is that kind of combination, I think, between like people who take trading specifically seriously that we can certainly appeal to, but also the notion that this token economy develops as sort of a widespread application.
Got it. And so you see sort of the main market for this application as kind of retail users all over the world, but maybe even with an Asia focus or kind of emerging economies focus.
Yeah, I mean, I think it's kind of up to us how we want to direct the where the project goes, and so we very well may make that that push as being our target audience.
There's a clear need for that. It's a great opportunity.
Yeah.
Mm-hmm. Cool. Can you guys talk a little bit about sort of your greater team and how many people are working on this project and the state of development today?
What's the latest count?
I guess full time we're at 9 or 10 at this point. Pulled in some really fantastic engineers, which is first and foremost, the most important thing to us. But also managed to surround ourselves with really incredible advisors, including Joe Lubin, and including Brock Pierce, and including the former chief scientist of Israel, and the former U.S. ambassador to Hong Kong, which actually we are incorporated in Hong Kong. That is going to be our home base. And so having the former U.S. ambassador of Hong Kong making phone calls for us is going to be very useful.
Nice. So the full-time people on the team, you said about 9 or 10. Is that mostly around engineering or sales or marketing or something else?
Think that we're certainly engineering oriented, but as of late have been spending a fair amount of time doing some marketing. So we've brought on a couple of folks to help us out with that, particularly with the launch and later with the platform launch.
Cool.
So it's fantastic. I think our engineers are kind of distributed around the world to some degree. The Daily Stand-Up has covered like 10 time zones or something. But at least for this week, we'll be.
Well, it's great. You guys are engineering oriented. That's how a early stage tech startup should be, and certainly not. You don't see that all the time in the ICO markets these days. But so
we're
great.
all technical, and hiring the marketing team. I think to the extent the main goal of that was so that Don's a great marketer. He's an incredible designer, but his time necessarily shouldn't be spent on that. His time should be spent on building a great product for the community.
Mm-hmm. And you guys mentioned that you've been working on this for a while. What's where is the protocol development and the sort of off-chain layer development? Where does it stand today in terms of functionality?
So we did release kind of like a product-oriented roadmap yesterday, which includes just kind of some big hits over the course of the next 6 months or so. The on-chain stuff actually is going to be, so we have this decentralized exchange contract, which as specified in the white paper, is actually going to be supporting the token launch. And so the launch itself is being run using our peer protocol and on our smart contract, as opposed to the traditional launch, which would use like a crowd sale contract. And so the exchange contract that we're going to be using for the launch is going to be published on the mainnet, and then we'll be subsequently using that for future trades. And otherwise, on-chain, I think for us, is the token, including locking mechanisms. We're planning to post both of those for public inspection in the next couple of days and through the next week. And going to be running a bug bounty on those. But then the off-chain stuff is going to be coming in, running some betas. We're going to get the front end in the next month or two. So.
Yeah, so just to focus on that a little bit more. So like Don said, we're doing the token launch through our own software. We're not doing it through just a smart contract. A crowd sale contract. So we're trying to actually demonstrate to the community that we're building something really cool and letting them test it, letting them battle test it. Your own dog food, so to say.
Our first iteration of our product is our launch, and so then subsequently, we're into a couple months is when like the indexer and Oracle will become more available for people.
Exactly, and so I guess a lot of the work that we've done to get this to a hyper scalable product is going to be the same work that we would have had to do in the development cycle, and so we're in pretty good shape as far as our roadmap and being able to release stuff later this year.
So we maybe did spend an unusual amount of time actually building tech for the launch, but that's for the fact that the tech for the launch is going to be on the same trajectory as the rest of the platform.
Exactly.
Great. So it sounds like you're doing interesting things with respect to distributing your token. Can you tell us a little bit more? Like, does this mean that you're going to use some of this exchange technology to create a distribution, or what does eating your dog food mean in this context?
Well, I mean, that means using our decentralized exchange contract for our decentralized exchange for our token launch. And using our peer-to-peer trading protocol as a purchase process for the token launch.
So how does that work? If someone wants to purchase the token, I think you guys said October 10th, right, is when you're whitelisting.
But the whitelist actually opens tomorrow, October 4th at 10 a.m.
Mm-hmm.
And our launch will be on October 10th.
Got it. So does that mean people who want to participate, they kind of log in and put in offers for your token?
Well, so they would come in, and there will be in this case a fixed price, and you request an order from the back end, which is then provided to you, and then you subsequently fill it as the taker of that order.
So I guess we ourselves are acting as that initial maker, because we're the ones who are going to be distributing out the AirSwap tokens, and we'll be taking in, I guess, Ether for like just the initial transactions.
Is there a target kind of amount of money that you're trying to raise for the launch?
Yeah, so our target was initially 150,000 Ether. And we did a pre-sale where we gave a discount, and so that pre-sale is currently closed, and we have it came in heavily oversubscribed, and we'll be publishing details of that later today. So the goal was 150,000 Ether. After the discount, it'll end up probably being something like 110 or 120,000.
Mm-hmm. Cool. Very good. And so is there anything else that people should know about how to prepare for participation in this event, or
like a quick rundown of what's happening over the next few days? So as Obed mentioned, the sort of the whitelist registration process opens tomorrow. We'll be running that for a few days, and then I think we're still finishing on Friday. 4 p.m. on Friday, so we're running for a few days, and then there are going to be 2 sales. We actually are running one for our beta testers to make good on a promise that we made to them a few months ago for supporting us. So there's actually a smaller sale that's happening prior to 10/10, but then we're doing the main sale on 10/10 over the course of the day, local time. So that so you'll need to have been registered for the main sale starting tomorrow.
Yeah, so make sure to register, and you can find the AirSwap team on Telegram at t.me/AirSwap, and obviously our website, which is airswap.io.
Nice. So I have one more question. I'll let you guys kind of give us some final thoughts after this. But so one of the things you mentioned is the ease of sort of, I guess, retail users or consumers to be able to swap tokens back and forth as they're using various kinds of decentralized applications. We now obviously live in a world where there are many tokens everywhere, which was at one time, not an obvious, result. But so, in the context of AirSwap, does it improve upon kind of the speed or ease of use of what you typically see with an on-chain decentralized exchange? The experience at those kinds of exchanges is, it feels good that you're transacting in a decentralized way, but it is quite slow. You have to get money in there. You have to put a transaction for every operation into the Ethereum network, and then in the absence of matching and so forth, it's even more work. What features does AirSwap provide that kind of makes the interchange of these tokens a little bit more efficient for consumers?
Yeah, so I think the example you're talking about is like EtherDelta, where you have to spend some time depositing and withdrawing orders, and the reason why they have to do that is because it's a public order book. So in that case of a public order book, you don't want to go and try to execute a trade and then for it to fail. So it requires essentially escrow, pre-deposit of funds. In our case, we're not requiring pre-deposit of funds. And we will most likely institute a reputation system so that market makers are given a certain reputation, and maybe a certain failure rate, so that they'll be penalized if they're providing a bunch of fake orders to takers.
Got it. All right. Well, thank you very much. Anyone who is joining us today, check out airswap.io, which will describe this decentralized exchange product. They have the white paper up there, and whitelist registration opens up tomorrow, and the event is on the 10th. Guys, do you have any kind of final thoughts on exchanges, AirSwap, or really anything else in the crypto markets today?
I would just say we're really excited to build something great for the community, and that's what we're going to do.
Absolutely.
All right.
And by all means, we're active in our channels. Come chat with us. Ask us questions.
All right. Fantastic. Thank you very much for joining AirSwap team, and good luck with your launch. We'll look forward to following your progress.
Thank you, Jake.
Thank you again.
All right, guys.